Hello everyone, I'm Arslan with the Trading Robot. We'll review 1 minute Dogecoin trades based on the banking strategy robot. The video is educational. If used correctly, you can profit from this market. Let's start. I'll shrink my image to avoid blocking your view. Get the PDF guide for the banking strategy robot from our Telegram channel or contact our support team on the Trading Robot website. As you can see, if you use it correctly, use it in a principled way. Excuse me for being so confused about how to make a good profit from this market. Let's go. I'll start with this tutorial first. Why didn't this worm work? Well, it's better now. I'll move my image to avoid blocking your view. You can get the PDF guide for the banking strategy robot from our Telegram channel, or ask our support team on the Trading Robot website. The robot has 2 main strategies you can practice. The first strategy gives buy and sell signals, meaning all 4 signals are valid. Click the orange banner at the top to reach support. You can also ask our support team for the PDF guide on the banking strategy. The robot has 2 main strategies you can practice. There are many other strategies, but these are the ones I and our trading team use. What's the first strategy? It gives buy and sell signals, or buy plus plus sell plus plus, meaning all 4 signals are valid. Check the next candle's color. For a sell plus plus signal, the next candle should be red. If a buy plus plus signal is given, the next candle should be green, regardless of the current candle. So, what's the first strategy? The first strategy gives you buy and sell signals, or buy plus plus sell plus plus, which means all 4 signals are valid. Notice the next candle's color. For instance, a sell signal means the next candle should be red. That's the second condition. A buy signal means the next candle should be green. The third condition is crucial. The candle must be in Heikin-Ashi mode. What is Heikin-Ashi? I'll show you. This is a regular candle. To switch, go to the top of the page, click on the Candles section, and select Heikin-Ashi. Your candle will become smoother. This style is useful with the strategy robot, especially for time frames under 30 minutes. As the creator, I recommend Heikin-Ashi candles, but choose what works best for you. Here's how it works. Go to the page top, click Candles, select Heikin-Ashi. This changes your candle to a smoother Heikin-Ashi. Use it with the strategy robot, especially for under 30-minute time frames. As the robot's creator, I recommend Heikin-Ashi, but choose what suits you. The candle must be in alpha mode, meaning a shadow in the signal's direction. For a sell signal, the next candle should be red. The second alpha condition, only a bottom shadow, meaning it's red with a bottom shadow. This is my first strategy. Take the sell signal. Don't enter every sell or buy signal. As the creator of this robot, I say, don't be a dick. Now you know all kinds of weapons, so deal with it yourself. The Heikin-Ashi candle must be in alpha mode. What does alpha mean? It means it should have a shadow in one direction. And which direction? In the direction of the signal. So here, if it was a sell signal, the next candle should be red. The second alpha condition is also important, because it should only have a shadow at the bottom, meaning it's red but only has a shadow at the bottom. So this becomes my first strategy. We take the sell signal. You don't enter every sell signal or every buy signal. The next candle is green. This second candle must be green. It should only have a shadow in one direction, right? It should be alpha. This one doesn't have a. It only has a shadow in one direction, right? That's what makes it alpha. This one over here doesn't have a shadow. For example, let me show you this candle. I'll bring up the image above it. This candle isn't alpha because it has a tiny shadow at the bottom. This one isn't alpha either. It's really easy to identify these. So, if it meets these 3 conditions, it becomes the first strategy. Now, what's the second strategy? We don't use buy plus plus and sell plus plus. The candlestick color signals a buy. If the next candlestick is red after a buy, start strategy 2. If strategy 1 fails due to color, switch to strategy 2. If the next candlestick is red, trade on the next one. If a buy signal is given, wait to see the next candlestick. If it aligns with the signal, like a green, after a buy, enter the buy signal. The method I know is this. The candlestick color gives a buy signal. If the next candlestick is the opposite color, like a red one, after a buy signal, we start strategy 2. If strategy 1 fails due to color, we switch to strategy 2. If the next candlestick turns red, we don't trade on the signal candlestick. We trade on the next one. If a buy signal is given, I prepare to see the next candlestick. If it aligns with the signal, like a green one after a buy, we enter the trade. If it's red, I wait for strategy 2. When it turns red and gives a signal, it marks a support level. A sell signal marks a resistance line. We wait for a strong break below this line, not just a shadow. It should close well below to confirm the break. Then we enter the trade. If it turns red, wait for strategy 2. A red signal marks support. A sell signal draws resistance. Wait for a strong break below. It must close well below to confirm. Then enter the trade. 3 conditions. Wait for buy or sell. If the next candlestick is opposite or weak, like a weak green, that's strategy 2. Wait for it to break resistance and fall. If it doesn't break, wait. You wait for it to break that line. With strength, not just a little shadow. It needs to close nicely below it. I mean, it should close well below that line. Not just a tiny bit. That means it's a break. Once the break happens, you enter the trade. There are 3 conditions. Wait for buy-sell signal. If next candlestick is opposite color or beta, not alpha, e.g. if buy signal, and next is weak green, that's strategy 2. Wait for it to break resistance and come down. If it comes and doesn't break resistance, what do? Do nothing, just wait. Remember, don't trade all the time. These are 2 strategies. Losing is worse. When confident, follow strategy. Now, let's see last 8 Dogecoin trades on chart. We're live. Let's see what bot did. Pulling up Dogecoin chart. What is not trading? We shouldn't always trade. These strategies mean losing is worse. When confident, follow your strategy. Let's check the Dogecoin chart and see the last 8 trades. We're live, so let's see what the bot's doing. I'll show the chart and explain. Adding strategy 1 bot to the screen. It made another trade, so 9 trades now. We'll start here and move on. I'll remove these as we go. The next signal is a buy plus plus. The next is an entry signal. If it's a buy, we go with buy plus plus. The next was green, so we enter. The next could have been a buy too, but we entered earlier. What happened here was a short. I've marked the trades and will explain. Adding strategy 1 bot. It just made another trade. We'll start here and move to the next. I'll remove these. The next signal is a buy plus plus. The next was an entry signal. Doesn't matter if it's a buy. We can go with buy plus plus. The next was green, went one way. The next could have been a buy too, but we got in earlier. We placed stop losses low, risking 1.5 to 2. Our target? 6.2%. Using 20x leverage, 70%. The entry was correct. The buy itself didn't have to be complicated. We just went with the buy plus plus. The next one was green, and only moved in one direction, so we entered the trade. The next one could have also been a buy, and we could have entered with buy plus plus, but we got in earlier. So what happened here was a short. So for the long position, you set your stop losses low, with a risk of 1.5 to 2. Here it shows either 1.5 or 2, so we set it to 2. It comes here. And what was our target? How many percent? 6.2%. This is all on a 1-minute time frame. If you were using 20 times leverage, how much would that be? 70%, right. In just a few minutes. Within 12 minutes. 1%. Let me erase this. It gave a sell plus plus signal, and the next candlestick has gone both ways. We're going with strategy 1, not because it has gone both ways, but because we're going with strategy 2. For the sell plus plus, take strategy 2. But since the next sell is entering strategy 1, it's off the table unless you wait for a break. Be professional. If you want a couple of candlesticks difference, go for the next sell. The alpha candlestick is red in the middle, so enter the sell trade. Keep the PDF handy as a reference. We should be very familiar with these, but if you want a difference of 2 candlesticks, go to the next cell. The alpha candle is right in the red pattern, and you will enter the trade cell. Keep that PDF with you. You can do it beautifully. If you're entering a 1.5 or 2, this hike and ashy candlestick is crucial. Don't get confused if the bot malfunctions. People will say, the bot is broken, and send screenshots saying, my candlestick is normal. I've made many videos. And they'll say, oh, it's working now. Stay sharp. Let's move to the next trade. This is interesting. Here's strategy 2. It gave a sell plus plus signal from left to right. What's the next candlestick like? It's gone both ways, so we're with strategy 2. The next one is red, so it's still strategy 2. We're waiting for the dotted line on the sell to break. Overall, strategy 2 is about sell and buy. We're not concerned with the pluses. Focus. Next trade. Interesting. Clean up. Strategy 2. Sell signal. Mixed candlestick. Use strategy 2. Red still. Here, strategy 2. It got a sell plus plus signal. So, it got a sell plus plus signal. It went both ways, sticking to strategy 2. Next is red, still strategy 2. We're waiting for this dotted line that forms on the sell to break. Strategy 2 is about sell and buy, not concerned with pluses. We're waiting for it to come here. If it breaks the line, we'll enter. If the close is good, we'll go. You enter the trade in the opposite direction of the signal, meaning if it gave a sell, you take a buy. Where did we put this? Tools are right here. Or they break the glass and enter the boat, or were you good at closing? Enter trade opposite signal. Sell means buy. Buy signal, go long. Stop loss below candlestick. Consider risk to reward ratio based on risk management and capital. Visit Trading Robot site for capital management video, essential for trading. We get a buy signal. We take a long. You put a slip under this candle. Now if the candle was big, under the same candle. If it was very small, for example, Levi Dost, there is a risk-to-reward ratio of 2 to 1 candle. You can take 1, you can take 3. It depends on your risk management system and your capital. Manage your capital well, or you're wasting your life. Visit the Trading Robot site for a video on capital management. It's like the Bible of trading. Keep it handy, or even the best robot won't work. This is strategy 2, profit in a 1-minute time frame, with or without leverage. The previous strategy had 25 candlesticks and was more profitable. Now, another strategy gives a sell signal. Check the sell plus plus signal. It's not strategy 1. Otherwise, no matter how good the robot is, it still works halfway. So with this strategy 2, you came in, made a profit, and got a percentage. In a 1-minute time frame without leverage, and with leverage, you could have made 20% in just a few candlesticks. How many candlesticks did the previous one have? The previous one had 25, and it was much more profitable. Like 1 1/10. That one also made 2. Alright, let me show you another strategy. This strategy has come in and given a sell signal. First, let's check the sell plus plus. It gave a sell plus plus signal, and the next one has been set, so it's not strategy 1. When it signals a sell, check both strategies. Choose strategy 2 for the green line break. It breaks at this candlestick. Enter. If it signals sell, you buy. Risk to reward is 2, 1 1/4. 1 is 20%, half is 10, so 30%. Now, over 20%. Enter against the signal. If it signals sell, wait for a resistance break, then buy. Set risk to reward at 1.5 or 2. We use 2. Market. How much? 1 1/4. At 1.5. We'll also bring this here. It's been tar-flowered for us. How much is 1 1/2? 1 1/2 if we take it. It's half, because our literacy is not good. 1, it's 20%, half. It's 10%, it's 30%, almost now. 20 and 4%. This is it. Here, this is strategy 2, which gave a sell plus plus signal. The next candlestick was also red, and went in one direction, so we entered the sell trade. You set your stop loss at the previous highs, and adjust your risk-to-reward ratio to 1 1/2 or 2. For example, we can set it to 2. It comes into profit, then it hits our stop loss. Just be aware that your stop loss might get hit. We have all these targets set, and if you hit one stop loss, you know what I mean. Just keep an eye on the market, my friend. Be fair. Now, by the bot, it appears on your chart. No extra installation needed. The first trade might stop out quickly. Give yourself and the market a chance. If stopped out, maybe 0.5% loss, or even 10%. Stop loss could be 5 to 20%. Stopped out at 10%, but by midnight, gain back 20%. Give yourself a chance. Don't take all market profits. Share. Stopped out. 0.5%? Even a 20% loss could be 10%. Stop loss might be 5 to 20% later. Stopped out, lost 10%, then by 11:30 or 12, you made 20% in trades. Thinking everything should be profit and no mistakes? Forget it. This is real trading. You came 1, 2, 3, 4 and got 20%. Forget the idea that everything must be profit and perfect. Real trading is like this. Review the last 3 trades. We have a buy signal. The next candle is green, so I'll follow the strategy. I'll wait for resistance to break. It broke here, so I'm entering. Let me show you these trades. We have a buy signal, and the next candle is green, so I'm following the strategy. The next one was a buy too, and it's a 2-dimensional strategy. I'll wait until resistances break, and on this candle, it broke. So I'm entering here. All conditions are met. It's beautifully broken in green, and this was a buy. Use conditions from the PDF or the previous ones. You're taking a risk-to-reward ratio of all the conditions are met. Use conditions from PDF or previous ones. The difference will be clear. Risk to reward is 1.5 or 2. Not guessing. It could be 10% or more. To make up for a loss, we have a sell signal. Next candle is red, so we sell. Place it here, depending on strategy. Take it or leave it. Up to you. You'll get it based on the coin. Risk to reward is 1.5 or 2. Using 1.1 leverage with 20 means around 22. Let's take this last trade. Go back to see what's going on. I'm just trying to make up for that one loss. Here, we have a sell signal, and the next candle is red, so we're taking the sell. It's pretty clear. You can place it here. Depending on your strategy, you can take it or leave it. It's up to you. You'll get the hang of it based on the coin you're trading. The risk-to-reward ratio is 1.5 or 2 here. Now, how much leverage are we using? 1.1 leverage with 20 means it's around 22. Let's take this last trade for you. We need to go back to that trade that just happened and see what's going on. Oh wow! How much did it go up? 1.1 leverage with 20 makes it around 22. I need to take this last trade for you. We should go back to that trade that just happened and see what's going on. Oh. We have a sell signal, but the next candle is green. It's a sell strategy, and the next candle is red, but it can go both ways. We'll follow the 2-dimensional strategy, waiting for a strong close above this candle. A strong close is where you take a long position. Set your stop loss here due to the candle's size, or based on the previous one. Take a long position and set your stop loss here. Alternatively, use the previous one. Setting it here might stop you out, but not if set elsewhere. Entering here gives a risk to reward of 1.5. Entering with a 1-to-1 ratio would hit the target, but it dropped too fast. Setting it differently wouldn't have been bad. Our stop loss was hit. The market is unpredictable. We lost 0.5%, equating to 10% with 20x leverage. 2 losses, 6 profits with a risk to reward ratio. Entering with a risk-to-reward ratio of 1 hit the target, but it dropped too fast, hitting the stop loss. Setting it here wouldn't have been bad. It would have been fine. Yet, it hit our stop loss despite a good signal. That's the market. We can't explain its actions. We lost 0.5%, a 10% loss with 20 times leverage. Overall, 2 losses, right? 1 loss, 1 profit, 2 profits, and we lost 0.5%. How much? With 20x leverage, 10% loss. We had 2 losses, 1 loss, 1 profit, 2 profits. And this one is a loss. 6 profits and 2 losses with a risk-to-reward ratio. Each profit covers 2 losses, so 1 profit covers 2 losses. It's like we've netted 5 profits. This one also got stopped out. We can count this one as part of the stops. Market was sell signal, then green, so no sell signal. The next was red, with all conditions. We set the stop loss high, and the risk-to-reward ratio is each profit covers 2 losses. 5 profits net us out. The market was in a sell signal, then green, no sell signal. The next was red, meeting all conditions. We set a high stop loss with a risk to reward ratio of 2. 3 stops take away 1.5 profits, so 2 profits cover these. We're up 4 positives. Dogecoin's 1-minute time frame gives many signals daily. The 3-minute and 5-minute frames have their own dynamics. Trade gold. Check these 4 trades. This is strategy 2, and this is strategy 1. Both strategies are amazing. For more info, find the bot link in the caption. We've had 3 stops and 6 profits with a risk-to-reward ratio of 2. So these 3 stops take away 1.5 of the profits, meaning, come on, we're saying we have 2 profits, and those cover these. So we're up 4 more positives, right? The time frame is 1 minute for Dogecoin, and just see how many signals it gives in a day. It's absolutely mind-blowing. Now, this is one time frame. My 3-minute frame. It has its own world. The 5-minute frame has its own world too. Trade gold. These 4 gold trades. This is strategy 2. This is 1. Link to bot in caption. Search trading bot on Google. Watch earlier tutorial videos on strategy 1. Check risk and capital management. Buy subscription for 1, 3, 6 months or annually. Longer subscriptions are more cost effective. Compare prices. Link to buy Tether with 10% discount and 5-day free subscription for signing up. Wanky trading strategy will let you watch training videos. I made these before, and you can also see the risk and capital management. You can buy it as a subscription, monthly, quarterly, semi-annually, or annually. The longer the subscription, the more cost-effective it is, so you can compare the prices. Also, down here, there's a link to buy Tether, which has a 10% discount, and you get a 5-day free subscription for signing up. You bought Tether, and you're a bit more savvy. That's it for tonight. Good night, and take care. You bought it, and you're a bit of a bro, huh? That's it for tonight. Have a good night, and take care.